Hi, I'm Jeff Mullen, founder and CEO of Dynamics. Started Dynamics to solve some of the largest problems in payments, and we have. We've raised over $110 million. The last round was a $70 million round led by MasterCard and the Canadian Imperial Bank of Commerce that gave us a post-money of roughly $600 million. Dynamics has two business units. The first business unit is a computerized credit card. We put a full computer into a card. We have buttons on the card, and in some cards we have displays. Consumers can select different options at the point of sale to get additional value and functionality. Banks can deliver multiple business models on a single piece of plastic. The second business unit we have is the only auth-based, real-time, open-loop loyalty system on the planet. Instead of getting your open-loop rewards at settlement at the end of the month, you can get them in real time within half a second of making a purchase. When you put both of these technologies together, you can create extremely disruptive products. At a recent North American Finovate, Dynamics introduced the Canadian Imperial Bank of Commerce Tim Hortons credit card. There's two buttons on the card. You press different buttons. It rewrites the mag stripe. It will run a different EMV applet and run a different contactless applets. You can put any two cards on a single card, including cards from different networks. This is a multi-network card. You press the Visa button to pay with open loop Visa anywhere where Visa is accepted. You earn rewards based off of that purchase. Using our real-time auth-based system, within half a second those rewards are transferred to an off-network, no interchange product that's a prepaid product. So it's actually cheaper than cash for Tim Hortons to accept these points. One button is to earn rewards, one button is to burn rewards. Dynamics has never in Europe introduced any performance metrics on our cards. That changes today. Bankers typically try and construct differentiation to move the needle just a couple of basis points. So at scale, material value can be provided. So how did the CIBC Tim Hortons card perform after the first year? It is the fastest growing retail co-brand credit card in the history of Canada. On page 7 of Charlie Scharf, CEO of Visa's 14-page annual shareholder letter, it's the only program mentioned by name for co-brand cards. Typically, merchant-funded co-brand cards are graded by additional activity, additional sales. That's typically viewed in a simple way as reward redemption rate. A top-of-the-line performing product may have a 10%, 15% reward redemption rate. The reward redemption rate on our card is materially higher, one of the best anyone's ever heard of. That's how Dynamics' technology has disrupted North American credit. Today, we're going to introduce a new hardware platform and new technology to disrupt European debit. European debit is one of the hardest segments to provide differentiation in. This technology can provide up to 100 basis points in cost-cutting value on certain transactions, which can then be provided back to the consumer as a rebate or additional value. Before we show the product, let's show the card. This is Dynamics' first publicly unveiled 3-card product. There's 3 buttons. You can put 3 cards in one. When you press different buttons, it rewrites the mag stripe. It runs different applets in the EMV chip and runs different applets in the contactless chip. There's an elongated battery that can provide up to 5 years of power in a single card. All these black specks are chips. There's almost a dozen chips in the card, and there's over 100 components. Cards are just as flexible and durable as a normal product. So this is the product we're introducing today. It is the first true multi-currency debit product in the world. There's 3 accounts. Each account is a different debit card number that settles in a different country. So it's actually a debit card number essentially functionally from a different country. This card has 3 buttons. It has pounds, euros, and dollars. When you press, for example, the pounds button, a pounds debit account is written to the mag stripe, run in the EMV chip, run in the contactless chip. This card is never seen now as an out-of-country card. And so there's 2 major fees that this card avoids. The first is a network cross-border fee, which in some territories alone can be up to 100 basis points a transaction. The second is that merchants, when they see an out-of-country card, their point-of-sale systems may prompt you to select a different currency. If you do currency conversion at the merchant, the bank is charged a direct currency conversion fee. These cards are never seen as out-of-country cards, and that fee is never applied. This additional value can be distributed on debit to the consumer as an additional rebate, fee reduction, or even rewards or cashback. However, what we've learned is not only do these cards reduce at scale about $40 in costs on average, There's actually more costs that they reduce based on our data by combining 3 cards into one. You see, when you ship a card, it costs about $5 to make the card, make the manufacturing materials, and get the postage for the card. When you combine 3 cards into one, you save 3 cards of that value, which is $15. Additionally, we have security technologies in all of our cards. Our cards have tokenized mag stripes, where the mag stripes change every time you swipe them. That on one card may reduce about $4 in value. On a plastic that has 3 accounts, it provides 3 times the value, or $12. Additionally, the lost stolen rate for a single card may be about 5%. But when a consumer carries 3 cards, they actually have more than 15% because they actually will leave additional cards at home and they're more prone to losing. When you combine 3 cards into one, you reduce the number of cards you're shipping, you reduce the calls to the call center. Additionally, by reducing replacement cards, a replacement card typically has about 3 weeks of inactivity before a card's activated. That's all additional volume and additional value that's obtained. And lastly, replacement cards have higher attrition than other products. People will switch out of cards more frequently when they have a replacement card. All of those inefficiencies go away. So when you combine 3 cards into one, you don't have to triple it, you get rid of 3 times the services, you consolidate it into one, and the value of that is about $50 on average per card. So these cards will actually reduce about $80 to $90 in value. We have several different types of products. You will see these cards in the market. We invite you to our booth, and we also invite you to work with us on a custom business model given your own attributes. Thank you very much.